Williams Realty Partners. I wanted to come to you today and show you my buyer's consultation. This one is a little long. You might think about condensing this for a buyer who's bought 4 or 5 houses, but I did just want to say that. I'll send you the PowerPoint as well as the PDF, and you can use that as well. Also at the end, I don't put everything in here. I also supplement this with a pretty long email. I like the buyer to know just about everything that could happen during the transaction. I like them to be as forewarned as possible. And so what I'm going to do in this video is I'm not necessarily going to present this like I would to a buyer. I'm going to say a few things that I would to a buyer, and then I'm going to add some of my commentary, to kind of teach you maybe some of the philosophies behind it or maybe some alternative things you could say. So let's get started. You are welcome to put a bio in here. I've often gone back and forth on this, whether or not they even care. I think a bio is probably a good idea. For me, I've been doing this quite a while, and I have a lot of time in the industry as a lender, as an investor, as a banker, and then, of course, as nearly 12 years as an agent. And I've been in the area for a while. One of the reasons why I do like to include this, or might like to include it, is just to give myself a little bit more credibility. I've lived in the area for a very long time and so on. So that's up to you if you want to put that in there or not. And I'm not going to sit here and read it to you, but you can put your own in there if you'd like. Now, I also like to talk to them about understanding the market. What I do like to tell them is that oftentimes, and not always, the seller will pay my commission. I used to say something like, my services are free to you. My understanding now is that because of the commission lawsuit, that's illegal. But it is important to point out that oftentimes the seller will pay my commission, and as far as I know, there's nothing wrong with saying that. I also like to differentiate myself between being a salesperson and a consultant. I like to talk about the idea of having the heart of a teacher. That's something that Dave Ramsey talks about. He says when you find a realtor or a financial advisor or something like this, you want to find somebody with the heart of a teacher, and I try to get that over to my buyers as much as possible, that I am in fact looking out for their best interests. We'll talk a little bit later about being a fiduciary for somebody versus being a functionary and so on. But also, more importantly, about understanding the market, I do like to remind buyers now that we are still in a seller's market. So I talk a little bit about what the market looks like. I think there's a misconception out there that buyers can go and just pretty much get whatever they want. Now, when you've got a listing and that thing has sat on the market for a while, it certainly seems like that. But good listings that are priced correctly, and I don't mean priced too low, but when good listings that are priced correctly, they will go fairly quick, and there's still many of them that are getting multiple offers. So I like to explain that. So market condition and inventory. Again, we are still in the seller's market. If you haven't gone to one of Stephanie's Trend Talks, I definitely recommend that. There's a lot of data in there that you could put in a buyer's consultation that they need to know about. So in Metro Atlanta for detached properties, the average list to sales price is still 97%. If you're doing this in a year, that number may be higher or lower, so you will need to update this from time to time. But again, I like to let them know that again in metro area for detached properties, the median days on market is 29 days. One thing you might want to point out too is I can't remember the exact number for attached properties like condos and townhouses. I believe the days on market is double that. And one of the things I do like to tell my buyers when they go to buy one of these properties, these attached properties, is when it comes time to sell, and if we're in a balanced market, it is going to be harder to sell than a detached property. That's just a fact. It always has been. The average list to sales price ratio without a price drop is 99%. This means that a house listed for $400,000 on average gets about $396,000. So I like to work for my clients, but also like to express to them the reality of the situation depending on the property. Now, if a property's been sitting there for 2 months, there might be an opportunity to shave a little more off of the asking price. But in my experience too, that it's only true about half the time. Sometimes if a property is sat on the market, particularly without a price drop, the sellers are dug in. And so that may be the case too. But I do like to remind them that lowball offers in this market are still a waste of time. Now again, you have to do whatever your client tells you to do within reason, as long as they're not asking you to break the law. And you can certainly choose not to work with that buyer after the fact if they're going in writing offers $100,000 below everything every time. But it is important, if they're serious buyers, to let them know that these lowball offers are a waste of time almost all the time. And also, one more final note: the median sale price is up another 0.6% from this time last year, up to 300. I'm sorry, $468,000. Again, just trying to get them to understand what the market actually looks like. Now, the most important thing they can do is find themselves a good lender. I would recommend they go with our in-house lenders, but they can go, of course, with whoever they want. Probably be a good idea to suggest a few lenders to them. But again, our in-house lenders are fantastic, and I certainly suggest they go with them. I would never show anybody a house without a pre-approval. That's just me. Same, you should treat that like the buyer brokerage agreement. I'm not putting anybody in my car or showing anybody any houses without a buyer brokerage agreement, and I'm not showing anybody any houses without a pre-approval or a pre-approval letter. So choose the right lender with experience. I talked to them, and this is a fact because I've seen this over the course of my career as a lender and as a real estate agent. A bad loan officer can cost you thousands of dollars and there's no recourse, and can also cause you to lose the home. So getting pre-approved is essential, and nobody's going to accept your offer anyway. In fact, many sellers are going to require a pre-approval before allowing a tour. Sometimes you can just put it back on the seller and tell them that, hey, a lot of times they won't let us view, so we need to get the pre-approval done right away. If they push back on that, you just need to ask them what their apprehension is. My line to them is always, I never met anybody who started looking at their credit application too soon. You may be 3 months out, but there may be something on their credit that's very, very bad that they need to know about. Or if their credit's bad, or maybe over the course of time they've had a few late payments they didn't realize, or so on. Our preferred lender can look at that and tell them exactly what to do to get their credit in line so they can get the best rate possible. It's always a good idea to at least have a conversation with the loan officer as soon as possible. And it gives you leverage in multiple offer situations. It gives you an idea of how much home you can buy. It might give you an idea that you can actually buy more house than what you thought, and so on. It gives you also an idea of how much cash you need to close. I think a lot of people out there don't realize that closing costs are a part of this game, not just a down payment. And they need to know that, especially your first-time home buyers. So this last bullet down here, closing costs. Lender and origination fees, escrow payments, and transfer taxes, etc., are usually about 2 to 3% of the purchase price. So, and a lot of people just don't know that. They need to be educated on the process. I've had many, many buyers who have told me, "Oh, financing is not going to be an issue," and it turns out it was. I heard somebody say not too long ago that just about every real estate mistake you could make, I've made, and I've done this before. Trusting a guy because he had a nice car or had a nice current house that he was good to go. It was anything but. Self-employed borrowers are especially troublesome at times. Not always, but at times. People who are on commission. I remember the most money I'd ever made in my life. I wasn't able to be on the loan of my house when we bought it because I didn't have a 2-year commission history, didn't have a 2-year self-employment history. And that's the kind of things that our preferred lenders can really work through and tell people. Oh, and one thing I skipped over. Many times, we as the agent, we need to let the buyers know this, we can see if the seller will pay some of the closing costs, but sometimes they won't budge on that. So it just depends. The other thing I like to make sure they understand is they need to own their own reality, and they need to make sure they're getting the information that the loan officer needs in a very timely manner. That could easily cause a delay in the closing, and it also, their rate lock isn't always permanent, or is it permanent at all? Sometimes it's 30 or 45 days. If we have a delay in closing, sometimes that rate expires, and sometimes the rate has gone up. I've seen that happen before. So it's important to tell the buyer that first bullet point. Work hard to give the loan officer all the requested documents in a timely manner, and give the loan officer accurate information. I always tell everybody, tell the lender everything. They're going to find out anyway. Neglecting to do so could cause delays in closing, loss of earnest money, and cancellation of the sales contract. And be honest with the loan officer. Underwriters are detectives, and they find every inconsistency. They almost always do. I've had buyers not do what the loan officer said when there was gift money involved. Sometimes they'll deposit cash into their account and try to use that as the down payment. The lender tells them up front not to do that, and sometimes they do it, and it will cause delays because that stuff All has to be verified. Third to last bullet point, once pre-approved, do not do anything to damage your credit. And we're going to talk about this on the next slide. But this could kill your approval. You know, I've seen people buy cars and furniture and run up credit card debt and open a new credit card. This stuff does not help. They can wait until they close on the house. Remember, a pre-approval is not a commitment to lend to you. All income, credit documents, and bank accounts must be verified. Now, our preferred vendors do put the loan through pre-underwriting, so there's a 99% chance that everything's going to be fine, but they are still not approved until the very, very end. So this makes accuracy and timely transfer of documents to the loan officer very important. And I'm going to let you read most of this on your own time, but these are the things that a buyer should not do while under contract. Oh, another one, don't change jobs or become self-employed or quit your job. You know, buy a new car, truck, or van. Use credit cards excessively. Spend money that you set aside for the closing. You know, if somebody puts in a earnest money deposit, that needs to come from the same account where the closing funds come from. Otherwise, they've got to provide two sets of bank statements. It's a mess. Don't omit debts or liabilities. Tell the loan officer everything. Don't buy furniture, appliances, or anything like that on credit. Don't originate any new inquiries onto your credit. Don't make large deposits while out first checking with the loan officer, because that stuff is going to have to be verified. Don't change bank accounts, and don't co-sign for anybody. So let's talk about our side of the transaction, the benefits of buyer agency. 100% of my clients choose buyer agency. Why? Well, one thing is I don't work any other way, but also it allows us to represent the interest of the buyer as a fiduciary. We want to get that buyer brokerage agreement signed. Number one, we have to now because it's the law. But it also enables us to represent them as a client and represent them as a fiduciary. Now, what I like to tell everybody is to call me first. I can help people with resales, any and all existing homes, not just KW listings. There is a lot of misinformation out there. Sometimes people think you can't show them anything but a Keller Williams listing. That is not the case. I can show them any property that's on the MLS. I can also help them with for sale by owners. Now, hopefully you won't have to deal with this too much, but you do want to ask them to call you first. A lot of times for sale by owners will pay at least a portion of our compensation. We can help with new construction. I promise you, you need an agent with new construction just as much as you do with a resale. I've done dozens of these, and you need an agent. And so what I like to do is tell them to call me first. And now is usually the point where I talk to them about the BBA or the buyer brokerage agreement. So maybe I'll pull the buyer brokerage agreement out now or maybe later and explain what my compensation is, and explain to them that we're going to try to get the seller to pay for it. But I also like to let them know at this time, before they sign, that if the seller doesn't pay all or part of my compensation, that the buyer will have to make that up. And you can always decide after the fact that you want to lower that commission. But my suggestion to you is, as the buyer's agent, is to always put whatever compensation you're comfortable with on that, because you can't ask for more after the fact. Okay. For sale by owners, call me first. Why? You still need representation and someone to go negotiate the contract. And I always put here, some for sale by owners will pay my compensation, not all. Okay. And I let them know, if you go it alone by yourself, do you want to pay an attorney by the hour to work up a contract for you? Or do you want to get representation from a licensed real estate agent? Guys, I got news for you, okay? They may be a real estate attorney, but they are not realtors. Many of them don't know as much as we do about the negotiation process, the representation process, they may not know a thing in the world about that. So it's always good to let them know to call you first. And again, hopefully you won't have to deal with this too much. New homes, call me first. You need an agent just as much, if not more, with new construction. The benefit is we represent you and we negotiate for you. The biggest benefit is knowledge and information. It is pretty difficult to negotiate on price with new construction, but at the very least, because we've done so many of these in our collective knowledge, we can at least let the buyer know what is coming, what does come with the house. We know what questions to ask. The seller on site represents the seller. The salesperson on site represents the seller. It's important to tell the buyer this. They may be the nicest person in the world, but they look out for and are paid by the builder. And again, builders often pay my compensation. Make sure they know that. So there's no reason for them not to call you first. The on-site salesperson will call me and not you. Let them know that. It'll save them a lot of time, and you can work through a lot of the kinks for them. So it saves the buyer a lot of time and a lot of convenience. Now, just to be clear on new construction, they write the contract and they are in charge, or they are in control of the earnest money. So it's important for them to know that. I have an entire video series about new construction that you should watch if you decide to take on one of these buyers, and I highly suggest you do it. Once you've done a few of these, it gets easier. Now, each one of them is different, but I would highly suggest, if you think you're getting a new construction buyer, to watch that video series I've created for you. So there are dozens of questions that I ask the new construction agent. Tell me about the lot. How many feet do I really have? Is there a tree saved where I can't build? Is there any areas on the lot where I can't build? What are the setbacks, and so on? Are the power boxes and the street lights on my lot? Are they going to be on my land? I'll show you a picture of that in a little bit. Can my realtor look at the contract? They almost always agree to that. Will you be the one planting sod? And is that sod and all those bushes that you planted, are those covered? A lot of times they're not. What's provided with the house? What's not? Are there mailboxes on each individual lot? Or do you have to go to a kiosk? Are the kiosks even built yet? Can I turn left out of the neighborhood? I need to know about walkthroughs and inspections. Gives my buyer the opportunity to know what the walkthrough and inspection process is like. What is your standard package? What can we upgrade? What can't we? How much money is due up front, or half the changes that we make due up front? What appliances come with it? What trims come with it? What kind of things don't come with the house? This is in my old neighborhood. Now, this is a lot more rare than it used to be, but this poor guy had everything put on his lot. Now, look, we can't do anything about this, but at least we can ask the right questions and know whether or not we're going to have all the phone and internet and the gas meter and all that stuff right out in my front yard. Those are the kind of questions and again, there are dozens that I can provide to you when the time comes. Again, watch that video series on new construction. But I like to show this to the buyer so they know that they have someone in their corner fighting for them. And this is just an example of a lot. One of them might have been rectangle, but here in the corners here, they can't build on it, or they can't put anything. Now, when it comes to shopping for your new home, we're talking to the buyer again. The average buyer looks at 5 homes before finding the one. At least with me, we try to get them to narrow it down to that many. It can be done as long as we're asking the right questions and showing them the right properties. Now, that's not always the case. I've shown people 50 properties, and I've shown a ton of people just one house. So sometimes that does happen. But it's important to let them know that we're going to try to take this as seriously as possible. We're not going to be look-at-oos. We're not going to look at houses we know we can't afford or we know we're never going to buy. Okay? The key to finding the right home quickly is your feedback. All decision makers should be present whenever possible while touring. You have a lot of people who are, and you can't always do this, but if it's a husband and wife couple, for example, you want them both to be there. Now, every now and again, you'll have somebody maybe who's out of town, maybe you can do a video call, but the majority of the time, you want all decision makers there. And I'll tell you something else. If the parents are going to be decision makers, they should probably be there too. Okay. So time is valuable in this market. Even in this market, it's slowed down a little bit. If you walk into a house and it's not the one, let's move on. Last thing we want to be doing is touring houses we know we're not going to buy just for the sake of it. If you find the one, be ready to make an offer and make it good. Homes are under contract in days, sometimes hours in this market. Yes, even now in 2026, that's the case, sometimes. If it's not the one, that's okay. I'm never going to try to force a buyer to buy a house that they don't want. But if it is, you must be willing to act fairly quickly. And so what I also like to do, the second to last bullet here, is remind them to keep an eye on the portal that you made for them, and let's be the first ones there. And what I also try to ask them is be respectful of our time and the other agent's time, because there's nothing worse than getting a text or a call, hey, can we go look at this house, and it was listed Monday, and here it is, Saturday afternoon. We should have been looking at that house early, either during the week or earlier in the weekend. So what I ask my buyers is, and I do it respectfully, is please avoid adding properties to our tour at the last minute. I have to communicate with the listing agent and then the seller. 24 hours notice is very important. Some require it. Okay. Now I have gone before and got a list from somebody on Friday afternoon, and then there was a house that they didn't see in there. They asked me the last minute on the Saturday morning when we were going to look, hey, can we add this one to it? And once you've scheduled a few of these, you'll see it's pretty difficult to put them in a logical order that doesn't keep you backtracking all the time, because some sellers have a hard time accommodating this request, and it's really hard to add those last minute. So you want to try to avoid that to the extent that you can. And the best way to do that is to educate your buyers, to let them know that, try to give you 24 hours notice, try to give you a clear and concise list, a very serious list. Again, we're trying not to be lurky-loos. We're going to try to look at the houses that we can only the ones that we're going to buy. So the purchase contract, I will go through the entire contract so we can move quickly to ensure that we get the home you want. So what I like to do when it's time to write that offer, after I get the particulars in, the closing date, so on, try to have a good conversation with both the buyer and the seller's agent about when a good time to close is I go through that contract with them and explain to them the due diligence period. I explain to them the finance contingency, the appraisal contingency, when the earnest money is due, what the special stipulations are, and so on. And what it does is it gives them an idea of what their responsibilities are in their timelines. These timelines are not suggestions. Okay? If we don't get the appraisal back in time and there's a dispute because the value came in low, we can kiss that earnest money goodbye if we decide to walk away because it didn't appraise. We have to start working right away. And again, on new constructions, to be clear, they write the contracts. We can look at them, but they write them. And I need to look it over for that buyer. They also keep and control the earnest money almost all the time. Now, one more thought on new construction. This doesn't happen often, but when we did an inspection on one of our new construction properties for my clients, the house was built in such terrible shape that we terminated. Okay, we didn't even want them to fix anything. The house was in such terrible shape, we decided to terminate. That's the kind of stuff you got to look out for. That does happen in new construction. Most of my new construction experiences have been very positive, but you do have to keep on them. Earnest money. This is a type of deposit to show that you were serious. You can write a check or send it via ACH to our office. In almost all cases, when you're representing a buyer, we're going to try to hold that at Keller Williams Realty Partners. And the easiest way to do that is have your buyer send an ACH. The only drawback to that, and it's going to be that way no matter where it goes, is it does have to clear the account first. So if the deal falls through, there is a certain amount of time you have to wait before the money can get back to the buyer. And again, it will be due right after we get an accepted offer. There are a few ways to get this back. The appraisal comes in low, and within the appraisal contingency period, usually 14 to 21 days, if there's a dispute over the appraisal and the value, the buyer can get their earnest money back. Also, due diligence. There might be some inspection issues. They can walk away for any reason they want during that due diligence period. And most of the time, that deal breaks up because the inspection was really bad, or maybe it was bad, but could be fixed and the seller refused. Again, with new construction, I, as the agent, have no control over your earnest money or your deposit. And sometimes it's not. Sometimes it depends. Sometimes the money to get started building a new property, if it hasn't been built yet, is substantial. So they need to know that too. Earnest money amount will usually be about 1% of the total offer price. That's not a rule, that's just what I've seen most often. Due diligence and the inspection of your new home. Due diligence and inspection is usually 5 to 10 days. So we have to act quickly. And the other thing we need to remind our buyers is you must get your insurance quote during this time frame. Insurance is a lot different than it used to be. They're kicking these things out of underwriting because of old rules and bad claim history and so on. So we had to be careful of that. We want to make sure the buyer needs to get an insurance quote right away to make sure there's nothing wrong. During due diligence, you can walk away for any reason. Inspections are anywhere from $500 to $1,000. Y'all, there is no limit to the amount of inspections a buyer can do. All right, so that number could be more than that. If there's a septic tank, okay, there's multiple buildings on the campus, you may spend more money. If you want to do a sewer scope, that's a little extra. If you want to get a termite levy, that's going to cost too. Inspections are designed to catch major defects. This is something you want to talk to your buyer about. You want to make sure they understand the expectation. We're going to try to do our best to ask for cosmetic items. Inspections cannot catch everything. That's just a fact. There's a lot of stuff that's hidden behind walls and all that the inspector, even a great inspector, will miss. New construction. A lot of times they make it possible for you to do a foundation, a framing, and then a general inspection at the end. My clients almost always have just opted to do the general inspection. That's a matter of personal preference. So we have a list of inspectors that we recommend. And what we're going to try to do is negotiate major items that the buyer would like the seller to fix. Many sellers will fix most issues, but they're not required to. They don't have to fix anything. Okay? An inspection fee, now if they do that and they decide not to fix anything, that inspection fee is non-refundable if the seller refuses to fix it. They need to know that. Appraising your new home. Cost paid by the buyer almost right away at contract is roughly around $550. It might be $600 today. And I guess the good part about this is it's very hard to overpay. Okay? And when do you usually pay? Almost right away once we have an agreement. Now what we'll try to do is try to get that payment done a little bit after the due diligence period, because we don't want to pay for an inspection, we don't want to pay for an appraisal that we're not going to use because the inspection was so bad. But at the same time, a lot of times it's hard to get an appraisal contingency beyond 21 days, so we not need to order that right away. Now keep in mind, if the appraisal comes in below the purchase price, you can try to renegotiate. Some people dig in. This must be done within the appraisal contingency period. Now fortunately for FHA, and I believe VA and USDA too, the appraisal contingency goes all the way up to the closing, so that's good news. But on conventional, there's a set amount of time, 14 days, 21 days, what have you. Just remember, the seller is not obligated to drop the price if the appraisal comes in low. I've had this bust up several of my deals because even though the numbers were obvious, the seller does not have to lower the price. All appraisal fees are the responsibility of the buyer, and they are not refundable no matter what. Okay. So now we've got the loan approval. Maybe we're 30 days in the process. We got the loan approval. Just warn your buyers this first bullet point, and the lender should be doing this too, but throughout the loan process, be prepared for the lender to ask for more docs. That is almost always the case. Okay, we just ask the buyer to trust the process and remember the goal. Here's the good news. If you've recommended a lender to them, let's say you've used the preferred lender in our office and they're getting a little irritated because of all the documents, the one thing you can say to them is, hey, look, trust the process. I promise you this would be the same for any lender that you would go with. They all follow just about the exact same rules. And I promise you, that loan officer, he does not want to ask for more than he has to. He or she doesn't want to ask for more than they have to. And I promise you, if they ask for it, they got to have it. So now we're clear to close and we're almost there. There's a reason to celebrate. Now let's talk about the closing a second. Taking title. All of your time and effort has paid off. It's time to sign the papers and eat some candy at the attorney's office. The attorneys generally set the time of closing. They generally only have opportunities Monday through Friday, 9 to 4. And sometimes, as a buyer's agent, you want to try to get on their schedule as early as possible. But sometimes, if it's on the 31st or the 1st or something like this, it's a lot of times you kind of have to take what you can get as far as their schedule. Most people have to make arrangements for time off work. I've seen people try to take a half day or a quarter day or whatever. I'd be careful of doing that because sometimes, every now and again, funding is held up for one reason or the other. the wire got stuck in the ether somewhere or whatever, and you're sitting at the closing table for 2 hours. So you got to be careful with that. That does happen. It's rare, but you need to make sure that the buyer knows that that's a possibility. Your Going back to the third bullet, talking to the buyer, your funds needed to close must be wired to the attorney. Send your wire at least 1 day prior. I would tell them to do it 2 days prior. I have seen so many people get closings delayed because they went in, they didn't have accurate wire information. You know, the bank was giving them a hard time. They went in the morning of to wire the money and they didn't get it in time. We had to get delayed a day. Get that stuff done a day prior, at least. Now, almost all the time, all parties need to be present. You can do what's called a power of attorney or a mail away, but to the extent that you're able, you need to make sure all parties are there and they need to bring their driver's license or photo ID. But most importantly, they need to celebrate. Now, this is totally up to you what you do. As a new agent, you might want to, instead of being able to tout your experience, you can tout the experience of our office, or you can tout the experience of Keller Williams Realty International and so on. Just make sure they always know that you're always working with a specialist, which is the case. Keller Williams has a 17% market share in Metro Atlanta. The next competitor is 6.8%. So the benefits of that are knowledge, accountability, or availability, and communication. So again, you may want to tout some of your own stats here after you've got some experience. But talk about Keller Williams. Talk about the huge network of over 200,000 agents we have. Talk about the huge network of over 200 agents in our office. Talk about the fact that you've got a coach that helps you. You've got a team leader that helps you, and so on. And then at the end, we're going to ask them. We're going to put them to a question. We're going to talk to them about the buyer brokerage agreement. You can either do that before or you can do that after. And you're going to straight up ask them, let's sign and put me to work. Now, you may get some objections for this. We'll handle all those later. But now's the time when they would come up. But bottom line is, for me, I don't work without an agreement. Number one, it's the law, and you can always put it on law, which is the case now. But I always tell them, this is the only thing that ensures I get paid and I don't work for free. And I'm not ugly about it, but that's one of the things you can say. But again, you can always back up on the law, and that's the case now. Now, are there agents out there showing properties without a buyer brokerage agreement? Yes. But you could always tell them, do you want to deal with somebody who's breaking the law and skipping about the rules? Because I won't do that. Now, finally, what I also tell them is to please check their email. There was an email I told you guys about earlier that walks through more and more of the process. So what I ask them is say, hey, look, I have sent you an email, or I will send you an email with more details about the process. And I would make sure I would probably send that after they sign the buyer brokerage agreement. Okay. But again, there's stuff in there. It's a long email, but they're buying a house. They're spending hundreds of thousands of dollars, and this is information they need to know. And it's up to you if you want to do this, but I would highly recommend at that point, if they're happy and they've signed with you, ask them who they know that you can help. Okay? All right, guys, that's it. I hope you found this helpful. Again, I will at some point send this to you, the PowerPoint copies, and as well as the PDF. You can change it up however you want. You can shorten it. You can make it longer if you want to. And thanks, guys.